Good morning. So today we are going to be talking about the top 7 things that will change your rate for your home financing. So I know that we see all of these interest rates every single day on the internet, online, on Instagram, on Facebook, you name it, we see it. However, did you know that there's a difference amongst the rates that we actually see on a regular basis online and the rates you actually get? Yes, there's a very big difference. So let's talk about that. The top 7 things that come into you getting the interest rate that you get on a regular basis. So here we go. Item number 1. That's all about the credit score. Yep, it sure is. So based on the credit score that you currently have, whether it's, let's say, a 400 or an 800, that will determine the different interest rates. So of course, I'm sure you're aware, the higher the credit score, the better the interest rate. But with that being said, keep in mind that just because you have, let's say, a 620 credit score or a 580 credit score, it doesn't mean that there is no programs for you. There is a multitude of programs that we have here at Prime Lending, over 400 of them actually. So let's go to item number 2. Item number 2 is the type of loan that you're doing. So how are you verifying income? Are you just doing a regular program, let's say with your regular pay stubs, bank statements, and tax returns? Or are you needing to get a little bit more complex of the verification of income, meaning bank statement loans, just verifying the deposits? Or maybe you're buying a rental property and you just want to use the rent to be able to purchase the home. Or maybe you have lots of assets and you want to use the assets to be able to qualify as your income. Well, all those different options of type of income verification will indeed change your rate. So on to item number 3, and that's going to be the type of program of a loan. Are you doing a conventional, an FHA, a VA, or one of those different kinds of income verification programs? Well, those all carry different interest rates. So based on those credit scores that we were talking about before, and based off of the income verification, and then going to the item number 3, which is the type of program, conventional, FHA, VA, etc., that will also change your interest rate. So on to item number 4. That's going to be the loan amount. So the loan amount of what you're financing. Are you financing $100,000? Or are you financing $900,000? Those two carry very different interest rates because you are in 2 completely different programs. And so in one case, you could be in a jumbo loan, and in one case, you could be just in the regular conforming limits. So those two do carry different interest rates and different requirements for the rate that you end up receiving. And on to item number 5. That is the purpose of your home financing. So are you purchasing your home? Are you just refinancing what you currently have, which is a rate and term refinance? Or are you taking cash out? That is the other possibility. Or are you doing an equity line? Well, all of those different purposes do actually carry different interest rates. So the higher the risk, of course, the higher the rate. So we got to take that into consideration. And on to item number 6. That's going to be the amount of equity that you have in your home when you close. So do you have the value of your home at $500,000 and you owe $400,000? Well, you're at 80% of your equity. Well, at that point, that does carry one interest rate. However, let's say, for example, that you have the value out of $100,000 and then your loan amount is going to be at $60,000. Now you're actually at 60% of your equity. A lot of time you're going to find that what you see online is based off of you having 40% equity in your home. So on to number 7, which is a connection of 2 items. One of them being the term of your loan. Are you doing a 30-year fix, a 15-year fix, a 5-year fix? All of those have much different interest rates. And then the connection to that item number 7 is going to be the type of home that you are purchasing. So are you purchasing a 1-unit home, which is just a regular house? Are you purchasing a condominium or a townhome? Are you purchasing a manufactured home? Are you purchasing multiple units? All of those different types of homes and different types of terms carry different interest rates. So technically, we don't have 7, we have 8. So I know that this was a lot of information that we have today, but I really want you to see the value as to why all of this information is really, really important. So If you gain value off this video from me, Liz LeFore, Mortgage Liz today, feel free to share it with 1, 2, or even 3 people because this was a lot of information. Hope you're having an amazing day, and when you're ready to purchase your next home, or you have a question about home financing or smart home financing for your real estate needs, I'm here to help you. Hope you're having an amazing day, and let's talk soon. See you later.